Good afternoon, everybody, and welcome to this week's market update. Just want to spend a few minutes walking you through what we're seeing in the markets and what that means for you and your portfolios. I know there's been a lot of uncertainty, especially with the war going on in Iran. So just wanted to touch base on a few things that we're seeing right now and how that impacts you. So it's been a few months now when the U.S. initially launched strikes on Iran. We saw a pretty classic market reaction, right? There's been a lot of volatility since. And we know that markets don't like uncertainty. So across the board, assets were sold off, stocks were down, bonds were down, even gold fell, right, which surprised a lot of people. And then oil spiked on concerns about, supply disruptions, what was going to happen with the Strait of Hormuz. So initially, it was a, broad risk-off move. But what's interesting and what really matters is what's happened since, right? So markets have largely recovered, but not evenly across the board. U.S. equities, especially areas tied to AI and growth like tech and consumer sectors, have led the rebound and are actually back into the positive territory. And then emerging markets have also recovered pretty well, largely because of their exposure to global growth and AI-related demand as well as especially in Asia. So on the flip side, the more rate-sensitive areas of the market like treasuries, investment-grade bonds, etc., have lagged behind, right? So they haven't recovered nearly as much or as quick. So the main reason comes down to inflation. So even though the geopolitical risk has calmed down quite a bit and oil prices are still elevated compared to where they were before the conflict, that keeps inflation concerns alive and well. And because of that, the market is less confident that the Fed is going to be cutting rates anytime soon. So they are meeting this week. We don't expect any great news. Probably don't expect any, poor news as well. We just expect rates to probably be held steady at this time. So bonds, which typically benefit from falling rates, just haven't had the same tailwind. Even gold, which people thought of, as their safe investment, just hasn't held up particularly well. And even though it started at a pretty elevated level, it just hasn't seen the same demand once things stabilize. So when you zoom out, the real story here isn't just about the conflict going on in Iran, right? It's how the markets have behaved during that time. Stocks dropped quickly, but they also recovered quickly once that investors realized that the broader economy and corporate earnings probably aren't going to be significantly impacted. So meanwhile, assets that rely more on interest rate changes are still dealing with that inflation backdrop. So I think the biggest takeaway from this is, the people that did the best during this period weren't the ones who tried to, predict the market, time the market. They were the ones who stayed invested and remained diversified. So because these kinds of things, are very unpredictable, we talk about this all the time in our reviews, and it happens fast and markets move fast, but they can also recover pretty quickly as well. So most people don't know when to get back in. For that, we don't know, we don't want to be timing the market. So rather than, trying to time those moves, the better approach is just to stay disciplined, stay invested, and make sure that your portfolio is positioned to handle different environments. So, and that's exactly what we're trying to focus on, right? So as you come in and looking over your plan and doing a review with you, we want to make sure that we're looking at the broad scope of things and what's really going on around the world and how it's impacting you. So that wraps up this week's market update. So as always, if you have any questions or want to discuss how this impacts your specific situation, don't hesitate to reach out. And then as always, you can feel free to share this with anyone you might think that might find it helpful. So appreciate y'all listening, and we will see you again shortly.